All right, guys, so in today's video, we're going to talk about Fidelity's MSCI Information Technology Index ETF. That is ticker symbol FTEC. Let's go under the View All tab. Let's break this down. So just looking at it right now, it is $155 a share. Looking at the max on the chart, you can see that it is at all-time highs. So this is definitely something, if you're going to be buying, you definitely need to dollar cost average in because you are buying at the highs. But it gets very interesting looking at this fund because of the composition of it, which we'll get into. So let's go over the quick facts on a detailed quote. It trades around $156 a share. The gross expense ratio is 0.084%, so pretty low for technology companies because you get a lot of growth out of these, which we'll get into. Analyst ratings rated 5 stars, and they're going to get high stars because they have very good returns. But what I want you to see is when it comes to FTEC, this is what they invest in. 80% of the assets are in securities in the underlying index, which follows the MSCI USA IMI Information Technology Index. Basically, it just represents the performance of the information technology sector in the US equity market. But when you invest in FTEC, I want you to focus on the top 10 holdings over here. Notice that these 10 holdings make up almost 62% of the portfolio. FTEC has 302 companies within it, but Microsoft is 21%, whereas Apple is 19%. So when you buy FTEC, you already have about 43% just in Microsoft and Apple. So this is an interesting strategy. And in my opinion, if you're going to buy something like this, just be wary that you might own Apple or Microsoft and other funds such as the S&P 500. So you're very heavily concentrated in these two companies, but it doesn't mean it's not going to perform well. Look at the profile, top 3 holdings, Microsoft 21%, Apple 19%, NVIDIA only 6%, which has been on a rampage in 2023 and 2024. United States companies, 99% of this FTEC, and then it's in large cap, 82%. And information technology makes up 99% of this. So because you're buying a technology ETF, you are very tech heavy, obviously. But look at the 1 year here, 48%. In the life of it, 20% a year. So just buying Microsoft, Apple, NVIDIA, Broadcom, Salesforce, AMD, you're making excellent returns. But you have to contribute these returns to Microsoft and Apple because they make up 43% of the fund. So if they start to pull back, this fund will pull back as well. Now let's scroll back up. Let's look at the composition in more detail. When we're going under the composition, you can see that it's a sector equity passively managed. That's how they keep the expense ratio so low at 0.08% under technology. When you're looking at the top 10 holdings, we've already reviewed this, but I just want to show you the market capitalization giant is 56.7%, whereas the large is 25%, the median is 10%, and then you have small and micro only making up 7%. But let's click on the all holdings by weight, just so you can get a good idea. Take a snapshot of this so you can see exactly what we are investing in. We reviewed the first 10 companies, but I just want to go through some of the other ones. And notice how small they are. So once you get down to the nitty gritty, these other technology companies only make up about 1% and even 0.5%, and some are just 0.25%. I don't know any of these other companies, what they are. I've never heard of these, Jabil, Teledyne, EPAM. So you could tell it's trying to just focus on technology, but even some of these smaller companies are worth 0.1% of the fund. So it's worth looking into them. But I don't really know exactly what all of these funds do, to be honest. So now, looking at it, large cap growth, it's in all growth companies. And what are we investing in? Software, semiconductors, technology, storage, peripherals, IT services. Now, what's really impressive to me is looking at the distribution and expenses. You have the expense ratio of 0.08%. And you are also getting a dividend yield of 0.72%. So every year that you hold this, you are getting a dividend of 0.72%. So that is nice. And it just shows the Q2, Q3, and Q4. So you're getting paid every quarter. So March, it looks like almost twice a year because you have June, September, 3 times a year. So actually it is getting the quarter, which is nice. You're getting quarterly paid. I just got confused because you have 2023 and then 2024 up here. So you're getting quarterly dividends, which is nice. at that 0.71%. Ratings and analysis, we reviewed 5 stars, but of course it's going to have 5 stars. I mean, look at the performance of this company. This ETF, FTEC, is incredible. If you invested just $10,000 in 2013, you would have $60,000. That's an excellent return. And 1 year, it's up 50%. That's amazing. And that's how technology goes. Technology has the ability to go up 50-60% in 1 year, which you can see right here. But more importantly, the lifetime is 20% a year. So every $100 that you put in, you're making $20. So that's an excellent return right there. Now, just reviewing, looking at the comparisons, they have other ETFs that you can compare against. FTEC is very competitive looking at the expense ratio. As you could see, 0.08% here compared to Vanguard's growth fund at 0.1% and XLK at 0.09%. But you have to compare, when you look at these other funds, how much composition is in Microsoft and Apple. Like here is a good example. This is the Vanguard VGT growth ETF, and I'm just going over the composition real quick so you can see, because it's another technology sector. But look at the top 10 holdings. Top 10 holdings make up 60%, but you're not as heavy in Microsoft and Apple. Yes, Microsoft is 22% in FTEC, and Apple is still high, but at least you have NVIDIA at 10% and Broadcom at 4%. So you can see that at least, if Microsoft goes down, it's still 18% of the ETF, but you can at least kind of have less concentration risk. Looking at the basic statistics, here we go. So we have FTEC, we know it's an ETF, it's an open investment company. And when you look at the net expense ratio, FTEC is very low at 0.08%, sector equity mean at 0.5% expense ratio, whereas FTEC is very competitive at 0.08%. The dividend yield is much lower though, because I'm assuming it's because it's so heavily weighted in Microsoft and Apple, and the dividends are not as big, and that's what makes up the majority of the fund. And obviously it's in growth companies, so it's trying to grow and not pay a dividend. You're not really in this fund for dividends, you're in it for the growth potential that you can get. All right, guys, so thanks for tuning in. I mean, when you look at FTEC, you can tell that it has a lot of potential. It grows 20% lifetime year over year. You just have to be careful of that concentration risk of Apple and Microsoft, so make sure that you're not too heavily invested in them within your other funds. But it's definitely something to be interested in, but I definitely would be very weary investing at this price in 155. We'll see as this video ages to see where this price goes, but always do your due diligence when you're going to buy something. But it's definitely something worth mentioning. I think it's another ETF that Fidelity offers that could be of value to you. All right, guys, thanks for tuning into the channel, Trading Simplified. Be sure to check this out, my playlist of only Fidelity index funds and ETFs, where I have energy index ETFs, I have large cap growth index ETFs, I have small cap index ETFs, how to change dividends and capital gains on Fidelity, the real estate index fund on FSRNX, which is Fidelity, the Fidelity FSELX semiconductors. Check out my playlist. It's got everything Fidelity that you need: healthcare, financials, energy, total market, whatever it is. I'm going to keep uploading the Fidelity because it's great material for you to know. And be sure to just leave a comment, hit that like button, subscribe, and I'll see you next time.